Hello, I'm Liz Lumley from Finextra, and joining me today are Richard Wiltshire from HSBC, Nick Noble from SmartStream, and Ludy Limburg from RBS. And the four of us are going to have a conversation about intraday liquidity management. So I'm going to start off with a framing question. I'm going to start with all of you, and I'm going to start with you, Richard, first. In terms of banks managing their cash and managing their intraday liquidity, what are some of the biggest challenges that they're facing right now?
I think generally speaking, the main challenges are around the sheer quantity of data that banks are expected to capture and to analyse, what the expectations are of banks in terms of being able to actually utilise that information in a value-add way, and being able to demonstrate that they are able to ensure regulatory compliance as well as being able to support their business model in the right way with using that new information.
So Nick, when speaking to some of your clients, are some of the things Richard said, ring a bell with what you're hearing?
Yeah, so definitely. So there are clients who are coming to us to try and kind of tackle the problems that they're being faced with, and it is a massive an integration problem they're trying to face. They've got lots of different settlement markets, lots of different nostro agents. There's a lot of data, and there's a very wide range of the quality of data. So kind of that's the first challenge that they're facing, is actually consuming all the data and kind of understanding that. The second part is the analysis and the adding value, like Richard said, on top of all of that, all those data points, so that they can, one, report against it from a regulatory perspective, but also try and gain some value back for the ultimate investment that they're going to have to put into to achieve these reporting requirements. Mm-hmm.
So Ludy, so to finish us off with what you're seeing are some of the biggest challenges.
Yeah, the problem of course is going last, because lots have been said already. But I think one of the problems we're facing is the one we create ourselves. We have the need for the data, but we're using the data, and in that we will influence what happens during the day, and that will accelerate the need to actually have the data and have the ability to do something with it. So, and that's going very quick at the moment. So yes, it is a challenge to get the data. Yes, there is a huge need to actually do something with the data, and that will create the ability to influence that game even further and, influence what's happening during the day.
So I'm glad you mentioned data, because I'm going to stick with you for the next question about, maybe you could go into a bit more detail on what some of these sort of data management issues are there that are inherent in managing intraday liquidity from the front office.
Yeah, they are huge. I think I would focus on two areas. Bank internal legacy systems. We've been banking for decades on forecasted data, end-of-day data, so systems deliver end-of-day information. Operations are set up to work with end-of-day information. So if you try to get intraday data out of there, then obviously you need to do something. Systems may not capture the data intraday, they may not even put data points intraday in. So where are you going to get it from? So that's a huge upgrade internally. Then I think the other element is the standards cross banks, how to exchange that data with each other, how to exchange that type of intraday data with the infrastructures. Currently we have mainly based, the whole infrastructure is based on MT standards. The MT standard is not really fit to carry intraday data. We don't really carry the intraday element, the intraday timestamp. And I think moving forward XML will probably solve that, but XML is not there yet, and that will take, most probably another decade, 5 to 10 years.
Wait, I think you're being generous. So, Richard, I'm going to move to you to move this conversation on to talk a little bit about the issue of relying on intraday overdrafts. How can FIs really demonstrate their ability to manage and control liquidity without relying on these overdrafts?
I think the concept of overdrafts will continue to play a part in how we manage cash throughout the day. But I think the focus is on banks to be able to have less reliance upon those. And I think there are a number of mechanisms that we can use to have less reliance. We can look at potentially collateralization of those accounts. We can look at increasing the amount of netting of cash flows that we do over those, where we have reciprocal arrangements with our counterparties. We can look at settling transactions over account rather than forcing payments externally into the payment systems. So I think they're some of the primary mechanisms that we can use. I think if we to layer over the top of that the additional visibility that we're striving for to have over our liquidity intraday, we can use a combination of those tools plus that added visibility to proactively manage how we do how we manage our payment flow across our accounts, so that we have this lesser requirement on overdraft facilities.
That was interesting that you listed some of the alternatives to the intraday overdraft.
I think they exist already. I think there will be greater pressure on banks to look at how they can get greater leverage from those tools at the moment, I think.
So, I mean, all of you have mentioned data. Nick, I'm going to go back to you to continue this conversation about data and what you're hearing from your customers. I mean, how big a challenge will it be for banks to gather their intraday liquidity data? You know, what kind of strategies are they trying to employ?
So there's definitely some uncertainty with our clients of how they're going to manage this, and they are coming to us as a vendor who's in this space, and we're talking to lots of different banks. So we've got quite a good breadth of understanding of the different challenges different banks are having. So one of the main challenges is getting the intraday data from Nostro agents, for example. So there's been no real push in the market to provide this kind of data before. Some people are already doing like a real-time cash management process on top of like the traditional end of day, but that still doesn't give you the intraday data points that are required. So there's a big challenge in actually getting that data in, and there's going to be pressure put on the correspondent banking service market to supply that. And I think there will be, and I think that's kind of another angle of this whole intraday liquidity push, is that's going to affect the correspondent banking services that are reviewed. So the first challenge is getting the data points in, and then the second challenge is what you do with all that information. And there's a lot of number crunching. All the analytics that are required for the BIS reporting requires several layers of calculating and analysing all those data points. So data quality is going to be an absolute kind of key part to play. The data quality probably isn't quite there in the market at the moment, but there are strategies that can be employed now to prepare for when things do get better, and also achieve what the regulators are asking for right now. So we're very much working in that strategy where it's kind of best endeavours with the lay of the land as it is, getting ready to and being prepared for when things improve to absorb those improvements and continually improve the intraday liquidity management process.
So the three of us had a bit of a chat before we stepped in the studio, and all of you mentioned that we probably couldn't get away with not talking about real time. So I'm going to go with both Richard and Ludy, so I'll start with you, Richard. How soon will banks be able to provide their intraday liquidity data in real time?
The concept of real time is already out there in varying degrees of maturity, I think, across different markets, and at a lower level across different correspondent banks. So I think there's, as Nick's just touched upon, there's going to be a greater dependency upon correspondent banks to enable themselves to be sophisticated enough to provide their client base with real-time information that ensures complete coverage across all of their reportable transactions throughout the day.
So yeah, Ludy, do you want to comment on that?
Yeah, I think we're heading indeed that direction. There are some capabilities out there already, but I think the real time isn't even the most important to start with. I think knowing the data points and having visibility on your intraday liquidity and your intraday liquidity risk will maybe even be more important as a first step, because that will enable you to assess the amount of intraday liquidity you're using, the amount of intraday liquidity is involved in the underlying business you deliver to your customers. And that understanding will deliver input for all those processes that create products, and we'll get the intraday liquidity manager point of view, the intraday liquidity value integrated in your product development and in the way you develop your network management and the way you develop your market infrastructures, etc. I think for many years this problem has been with one or two people within the bank, and they were not seen. And now this problem gets distributed throughout the bank and becomes a very important element, stakeholder within all these processes. And that's where actually I think the improvement needs to come from. And all the rest, so like using the intraday liquidity real-time data will only add to that, will only increase control.
It seems like before all these processes start, the quality of the data really is an issue.
Absolutely. You need to have the quality of data, because otherwise you're looking to conclude on numbers which might not be correct. And yeah, of course you need to have correct numbers to be correct in your conclusion.
So I've got a final question for the three of you, and I'm going to start with you, Nick. And in all the conversations over the past few months about managing intraday liquidity, bring up the directions from the Bank for International Settlements, and are all these sort of the point of regulations and directives are to bring more stability to the market? Do you think that these ultimately will bring more stability to the market? Are we moving in that direction?
So I definitely think the push behind it is heading in that direction, but it may be a little bit of a bumpy road to get there. And I think everybody's suddenly having this new visibility and these new requests for information that aren't kind of apparent at the moment could affect people's behaviour and how they use liquidity. So I think there's a bit of a double-edged sword that could prevail, but I think it's very important that it's not something that can be ignored, something that has to be managed, and I think it will organically kind of level itself out over time. But I think people, going back to Ludy's point, is although some people can view it as like not a real-time process, I think the challenge there is going to be if you provide and analyse data that is respecting an intraday picture, if you're not able to actually act upon that at those points in times when those things are happening, you're kind of highlighting to your regulator points of potential stress or points, points of interest, but then you're not really able to show that you're able to do anything to manage that process at the time. So I think it will create a lot more stability in the market, but I think there may be some challenges along the way as people adapt to all this new information that's going to be coming out from the back of it.
So Richard, are we moving towards a new sort of stable utopia, or is the future picture more complicated than that?
I think it will be more complicated before we get there, but I think as long as there is an element of pragmatism applied by both regulators around the world and the banks and correspondent banks, then I think we should be in a position where ultimately we can get to a position where we can safeguard liquidity in payment systems throughout the world. And I think, as Nick rightly mentioned, there will be a period, I think, of instability to start with, where all of the consumers of this information are trying to get to grips with what it actually means to their own business. And I think as long as they are in regular dialogue with their regulators and with their asset liability management teams around how to make the best utilisation of this new information and don't make any fundamental business change decisions off the back of it, then ultimately I think we will arrive at a point where we have stability.
Okay. So Ludy, do you agree with Nick and Richard that we will have a short period of instability moving on to more efficiency?
Yeah, certainly, because not every party in this market will be at the same level at the same time. So if you're more advanced than the other, then you might want to use that advantage, and that would create instability. I think there's also a huge opportunity out there, because everything we do is designed around things we did in the past, the forecasting, the end of day, but also our market infrastructures, and also the RTGS systems we use across the world. They are not designed to be very liquidity efficient. Of course, there are some advantages made already in the recent years. I think there's far more opportunity there. So if we also attack those problems together with the regulator, together with the providers of these systems, then there's a lot of intraday liquidity efficiency to gain, whereas the reporting requirement and the cost of intraday liquidity will also create a lot of cost for the bank. There's also that opportunity to save some liquidity. So I think that needs to go hand in hand.
So very good. Thank you very much, Richard, Nick, Ludy. Thank you.
Thank you.